Writing style informative. Hey there, savvy business owners. I'm here today to delve into a hot topic that's sparking conversations in boardrooms across the globe, the UAE's new corporate tax rate of 9%. Yes, you heard that right, 9%. Let's break it down. Starting June 1st, 2023, businesses in the UAE will be required to register with the Federal Tax Authority if their financial records meet certain criteria. This is a game changer in a region known for its tax-free perks, and it's crucial to understand what this means for your business. First off, why is this happening? The UAE government is diversifying its economy, reducing dependence on oil revenues. This tax is a significant step towards aligning with global tax practices. Now, how does this affect you? If your business's annual income exceeds 375,000 UAE dirhams, get ready to register for this new corporate tax. But here's a silver lining. The UAE aims to remain a competitive business hub, so this tax rate is actually one of the lowest globally. What should you be doing? It's time to get your books in order. Ensure your financial records are accurate and up to date. This might be the perfect moment to consult with a tax advisor who understands the ins and outs of UAE's tax laws. And what about the broader implications? This move could attract new investments, as it portrays the UAE as a financially responsible and stable country. For existing businesses, it might mean slight adjustments in financial planning and strategies. To sum up, while the introduction of a 9% corporate tax in the UAE may seem daunting, it's a manageable challenge with the right preparation. Stay informed, stay prepared, and as always, keep striving for success in your business endeavors. Thanks for tuning in. Make sure to hit like if you found this overview helpful, and subscribe for more insights and tips. Until next time, keep navigating the business world like the pro that you are.